When it comes to the world of investing, few names resonate as strongly as George Soros. The Hungarian-born American investor, philanthropist, and author has become synonymous with financial success and strategic investing. With a net worth often cited in the billions, Soros's investment strategies and philosophies offer valuable lessons for anyone looking to understand the secrets of wealthy investors. Here are some key insights from George Soros that reveal how he achieved his remarkable success. 1. Understanding market psychology. George Soros is renowned for his deep understanding of market psychology. Unlike traditional investors who primarily rely on fundamental and technical analysis, Soros places significant emphasis on the human elements driving market movements. He believes that markets are not merely influenced by objective data, but are heavily swayed by the perceptions, emotions, and behaviors of the participants. This concept, known as reflexivity, suggests that there is a feedback loop between market participants' views and the actual state of the markets. In essence, market prices can influence the fundamentals that they are supposed to reflect, creating a cyclical effect where perception and reality continuously shape each other. Soros's application of reflexivity theory has allowed him to identify and exploit opportunities that are often missed by other investors. For instance, during times of economic crisis or market bubbles, Soros analyzes the prevailing sentiment and psychological biases that may lead to irrational decision-making. By understanding these biases, he can predict and profit from the inevitable corrections that follow such periods of irrational exuberance or undue pessimism. This ability to read the market's mood and anticipate shifts has been a cornerstone of his investment strategy, allowing him to make bold and often contrarian bets with high returns. 2. Embracing risk and uncertainty. George Soros's investment philosophy is characterized by a willingness to embrace risk and uncertainty. Unlike many investors who prefer to play it safe, Soros has often taken bold, high-stakes positions based on his in-depth analysis and convictions. His approach involves making calculated bets where the potential upside significantly outweighs the downside, allowing him to achieve substantial returns on his investments. This readiness to take risks is a defining feature of his career and has contributed to his status as one of the most successful investors in history. A prime example of Soros's approach to risk is his famous bet against the British pound in 1992, an event known as Black Wednesday. Soros and his team at the Quantum Fund recognized that the British government's attempts to maintain the pound's value within the European exchange rate mechanism (ERM) were economically unsustainable. Despite the inherent risks, Soros decided to short the pound heavily, betting that it would be devalued. This move required a significant amount of courage and conviction, as it went against the prevailing sentiment at the time. When the British government eventually withdrew the pound from the ERM, resulting in its sharp devaluation, Soros's fund made an astounding profit of over $1 billion in a single day. Soros's embrace of risk extends beyond individual trades and reflects his broader investment strategy. He operates under the principle that to achieve extraordinary returns, one must be willing to step into uncertain and volatile situations where others fear to tread. This doesn't mean taking reckless risks. Rather, it involves thorough research and a deep understanding of the factors at play to make informed decisions. Soros often engages in scenario analysis and stress testing, preparing for various outcomes and contingencies. This meticulous preparation allows him to manage and mitigate potential downsides while positioning himself to capitalize on significant opportunities. Moreover, Soros's willingness to embrace risk is complemented by his understanding of risk management. He employs strategies to limit potential losses, such as using stop-loss orders and diversifying his portfolio. This disciplined approach ensures that while he is willing to take on substantial risks, he does so in a controlled manner, safeguarding his capital against catastrophic losses. By balancing bold moves with prudent risk management, Soros exemplifies how embracing uncertainty can lead to exceptional success in the world of investing. For aspiring investors, this highlights the importance of not only recognizing opportunities, but also having the courage and preparation to seize them despite the inherent uncertainties. 3. Rigorous research and analysis. One of the secrets to George Soros' success is his unwavering commitment to rigorous research and analysis. Soros understands that in the complex and often unpredictable world of investing, having a comprehensive understanding of the factors influencing markets is crucial. He delves deeply into economic data, political developments, and social trends to inform his investment decisions, ensuring that every move he makes is backed by thorough investigation and solid evidence. Soros' approach to research is both broad and detailed. He does not limit himself to conventional sources of financial information. Instead, he seeks out diverse perspectives and alternative data sources. This might include studying macroeconomic indicators, analyzing geopolitical events, and examining societal shifts that could impact markets. By integrating these varied elements, Soros builds a holistic view of the economic landscape, allowing him to identify trends and opportunities that others might overlook. For instance, Soros' successful bets on the Asian financial crisis in the late 1990s were a result of his meticulous research and analysis. He and his team closely monitored the economic policies and financial health of countries in the region, noting imbalances and vulnerabilities. When signs of instability began to emerge, Soros was prepared to act, having already developed a well-founded thesis based on his comprehensive research. This preparedness allowed him to make strategic moves that resulted in significant profits when the crisis unfolded. Soros' research process is also characterized by a willingness to challenge conventional wisdom and question established narratives. He does not take information at face value, but instead critically evaluates it to form his own insights. This intellectual rigor helps him to stay ahead of the curve, as he is able to anticipate market movements that others may not see coming. His skepticism towards widely accepted truths allows him to uncover hidden opportunities and avoid common pitfalls, further enhancing his investment performance. Additionally, Soros leverages his extensive network of experts and advisors to supplement his research efforts. He collaborates with economists, political analysts, and industry specialists to gain deeper insights into specific issues. This collaborative approach ensures that his analysis is not only thorough but also enriched by diverse expertise. By tapping into a wide array of knowledge, Soros can validate his hypotheses and refine his strategies, making his investment decisions more robust and well-informed. In the context of practical investing, Soros' commitment to research underscores the importance of being well-informed. Aspiring investors can learn from his example by dedicating time and resources to understand the underlying factors that drive market movements. This means going beyond surface-level information and engaging in deep, analytical thinking to build a solid foundation for investment decisions. In a rapidly changing world, staying informed and continuously updating one's knowledge base is essential for achieving sustained success in the financial markets. 4. Flexibility and adaptability. George Soros is known for his flexibility and adaptability in the face of changing market conditions. Unlike many investors who stick rigidly to a single strategy, Soros is always prepared to shift his approach based on the evolving economic landscape. This flexibility has been a key factor in his enduring success, allowing him to navigate various market cycles and consistently generate impressive returns. Soros' ability to adapt is rooted in his understanding that the financial markets are dynamic and often unpredictable. Soros' adaptability is evident in his willingness to abandon a strategy when it no longer works and to embrace new opportunities as they arise. For instance, during the 2008 financial crisis, Soros quickly adjusted his investment strategy to respond to the rapidly changing conditions. He recognized that the crisis presented unique opportunities in distressed assets and other undervalued investments. By pivoting his approach, Soros was able to protect his portfolio and even profit during a period when many investors suffered significant losses. This ability to pivot swiftly and effectively is a hallmark of Soros' investment style and highlights the importance of being agile in the face of market turmoil. Moreover, Soros' flexibility extends to his willingness to reassess and change his views based on new information. He understands that clinging to outdated beliefs or strategies can be detrimental in the fast-paced world of investing. Soros often emphasizes the importance of being open to learning and evolving. When new data or insights emerge, he is quick to incorporate them into his decision-making process. This openness to change allows him to stay ahead of the curve and adapt to new market realities. For example, Soros has often shifted his focus between different asset classes, regions, and investment vehicles, depending on where he sees the most potential for growth. Soros's adaptability is also reflected in his approach to risk management. He constantly monitors his investments and adjusts his positions to mitigate potential downsides. This proactive approach helps him to minimize losses and capitalize on emerging opportunities. Soros's ability to balance bold moves with careful risk management is a testament to his skill as an investor. He understands that flexibility does not mean recklessness. Rather, it involves being prepared to act decisively when the situation demands it, while still maintaining a focus on preserving capital. In addition to adjusting his strategies and views, Soros's adaptability is demonstrated by his keen awareness of broader economic and political trends. He recognizes that global events can have profound impacts on financial markets and adjusts his investments accordingly. For instance, Soros has often made strategic moves based on geopolitical developments, such as changes in government policies, international conflicts, or shifts in global trade dynamics. By staying attuned to these larger trends, Soros ensures that his investment strategies are relevant and responsive to the broader context in which they operate. For aspiring investors, Soros's adaptability offers valuable lessons. It underscores the importance of being flexible and open-minded in one's investment approach. Rigid adherence to a single strategy can lead to missed opportunities and increased risks in a constantly changing market environment. Instead, investors should strive to remain adaptable, continually reassessing their strategies and being willing to make changes as needed. This mindset not only helps in navigating the inevitable ups and downs of the market, but also positions investors to take advantage of new and emerging opportunities as they arise. 5. Philanthropy and giving back. Beyond his investment acumen, George Soros is also widely recognized for his philanthropic efforts. Through his Open Society Foundations, OSF, Soros has donated billions of dollars to various causes, making him one of the most significant philanthropists in modern history. His commitment to giving back highlights the importance of using wealth for positive social impact, a principle that can inspire investors to consider the broader implications of their financial success. Soros's philanthropy is not just about charity. It reflects his deep-seated belief in promoting democracy, human rights, and social justice worldwide. The Open Society Foundations, founded by Soros in 1984, operate in more than 120 countries, focusing on a wide range of issues, including education, public health, and governance. Soros's approach to philanthropy is strategic and systematic. Rather than simply providing financial support, OSF works to create sustainable change by empowering local communities and fostering systemic improvements. For example, OSF has funded initiatives to improve access to education in underprivileged areas, support independent media, and advance legal and policy reforms that protect human rights. By addressing the root causes of social problems, Soros aims to create long-lasting and meaningful change. Soros's philanthropic endeavors are also driven by his personal experiences and values. Having lived through the horrors of World War II and the rise of totalitarian regimes, Soros is deeply committed to the principles of an open society, where government is accountable, rights are respected, and citizens are empowered. This commitment is evident in OSF's work to support democratic institutions and civil society organizations around the world. For instance, OSF has been instrumental in supporting pro-democracy movements in Eastern Europe and the former Soviet Union, helping these regions transition from authoritarian rule to more open and democratic systems. Soros's efforts in these areas underscore his belief in the transformative power of democracy and the rule of law. Moreover, Soros's philanthropy extends to addressing contemporary global challenges. He has been a vocal advocate for addressing climate change, supporting initiatives that promote environmental sustainability and combat global warming. Through OSF, Soros has funded projects aimed at reducing carbon emissions, promoting renewable energy, and protecting biodiversity. His involvement in environmental causes reflects his understanding that global prosperity and stability depend on the health of our planet. By investing in solutions to climate change, Soros is contributing to a more sustainable and equitable future for all. In addition to his work through OSF, Soros has made significant contributions to public health. He has supported efforts to combat diseases such as HIV/AIDS and tuberculosis, particularly in regions where healthcare resources are scarce. Soros's philanthropy in public health is driven by the recognition that health is a fundamental human right and that improving health outcomes is essential for achieving broader social and economic progress. His funding has enabled numerous programs that provide essential medical services, support research, and build healthcare infrastructure in underserved areas. Soros's philanthropic legacy serves as a powerful reminder of the impact that wealth can have when used for the greater good. His approach to giving back is not merely about donating money, but about actively engaging in the pursuit of a fairer and more just world. For investors and entrepreneurs, Soros's example highlights the importance of considering the ethical implications of wealth and the potential to effect positive change. By leveraging their resources and influence, successful individuals can address critical social issues and contribute to building a more inclusive and equitable global society. In conclusion, George Soros's philanthropy is an integral part of his broader vision and legacy. His extensive contributions through the Open Society Foundations and other initiatives reflect a deep commitment to promoting human rights, democracy, and social justice. Soros's philanthropic efforts demonstrate the profound impact that strategic, thoughtful giving can have on society, inspiring others to use their success to create positive change in the world. 6. Patience and long-term vision. George Soros's investment strategies often involve a long-term vision and patience, recognizing that substantial returns are not always immediate and that enduring market fluctuations is part of the journey. This long-term perspective is a crucial element of his success, allowing him to withstand short-term volatility and remain focused on his ultimate goals. For Soros, the ability to be patient and maintain a clear vision for the future has been instrumental in achieving sustained success in the financial markets. Soros's patience is evident in his approach to market cycles. He understands that markets are inherently cyclical, with periods of boom and bust. Rather than being swayed by short-term market movements or getting caught up in the frenzy of immediate trends, Soros maintains a disciplined approach, grounded in his long-term vision. He is willing to hold on to investments through turbulent times, confident in his analysis and the eventual realization of value. This patience enables him to ride out market downturns and capitalize on the subsequent upswings. For example, Soros's investment in emerging markets often involves enduring significant volatility, but his long-term perspective allows him to reap substantial rewards when these markets mature and grow. A specific instance illustrating Soros's patience is his involvement in Eastern Europe after the fall of the Berlin Wall. Soros recognized the potential for these newly liberated economies to grow and integrate into the global market. He invested heavily in the region, funding educational programs, media outlets, and democratic institutions to foster a stable and prosperous environment. These investments took years to bear fruit, but Soros's long-term commitment paid off as these countries developed and flourished. His patience in nurturing these opportunities showcases his ability to see beyond immediate gains and focus on the bigger picture. Soros's long-term vision is also evident in his approach to complex and multifaceted global issues. He understands that meaningful change often requires sustained effort over many years, if not decades. For example, Soros has been a long-time advocate for drug policy reform and criminal justice reform. Through his Open Society Foundations, he has supported numerous initiatives aimed at addressing the root causes of these issues, promoting policies that emphasize treatment and rehabilitation over punishment. These efforts require a long-term commitment to changing public perceptions, influencing policy, and implementing systemic reforms. Soros's willingness to invest time and resources into these long-term projects reflects his understanding that significant, lasting change cannot be achieved overnight. Moreover, Soros's patience is intertwined with his adaptability and willingness to learn from experience. He does not expect immediate success, but is prepared to adjust his strategies and approaches as needed over time. This iterative process of investing, learning, and adapting helps him refine his vision and stay on course towards his long-term goals. Soros' ability to balance patience with adaptability is a key reason for his enduring success. He is neither complacent nor rigid. Instead, he remains committed to his vision while being responsive to new information and changing circumstances. For aspiring investors, Soros' emphasis on patience and long-term vision offers valuable lessons. In a world where instant gratification is often prized, the ability to think long-term and remain patient is a rare but essential quality. Investors should cultivate a mindset that looks beyond short-term gains and focuses on the broader, more enduring opportunities. This means being willing to withstand short-term setbacks, maintaining confidence in well-researched strategies, and continuously learning and adapting along the way. By adopting a long-term perspective and being patient, investors can better navigate the inevitable ups and downs of the market and work towards achieving sustained success. In conclusion, George Soros' investment success is deeply rooted in his patience and long-term vision. His ability to see beyond immediate market movements and focus on the bigger picture has enabled him to navigate complex market cycles and achieve substantial returns. For anyone looking to emulate his success, adopting a long-term perspective and cultivating patience are essential strategies. By learning from Soros' example, investors can build a solid foundation for sustained success in the financial markets. 7. Learning from mistakes. Even the most successful investors make mistakes, and George Soros is no exception. However, what sets him apart is his ability to view his mistakes as valuable learning opportunities. Soros understands that errors are an inevitable part of investing, but he approaches them with a mindset geared towards continuous improvement. By analyzing what went wrong and why, he refines his strategies and enhances his decision-making process. This willingness to learn from failures is a crucial aspect of Soros' success and serves as a reminder that setbacks can be stepping stones to greater achievements. Soros' approach to learning from mistakes involves a meticulous review process. After every significant trade, whether successful or not, Soros and his team conduct a thorough post-mortem analysis. They scrutinize the assumptions, strategies, and external factors that influence the outcome. This detailed examination helps to identify both the strengths and weaknesses in their approach. For instance, if a particular investment did not yield the expected results, Soros would analyze whether it was due to a flawed thesis, unforeseen market developments, or errors in execution. This rigorous self-assessment allows him to learn from each experience and avoid repeating the same mistakes in the future. One notable example of Soros learning from his mistakes occurred during the tech bubble of the late 1990s. Initially, Soros was skeptical of the high valuations and rapid growth of technology stocks, viewing them as a speculative bubble. However, as the market continued to surge, he succumbed to the pressure and invested heavily in tech stocks. When the bubble eventually burst, Soros suffered significant losses. Instead of being discouraged, Soros used this experience to refine his approach to speculative markets. He recognized the importance of adhering to his analytical principles and not being swayed by market euphoria. This lesson reinforced the need for discipline and skepticism, even in the face of widespread market trends. Soros' ability to learn from his mistakes is also evident in his adaptability and willingness to change course. He does not let pride or ego prevent him from acknowledging when he is wrong. This humility enables him to pivot quickly and make necessary adjustments to his strategies. For instance, during the 1997 Asian financial crisis, Soros initially underestimated the severity of the economic downturn in the region. As the crisis deepened, he reassessed his position and adjusted his investments accordingly, mitigating potential losses and repositioning himself to take advantage of the eventual recovery. Soros' readiness to admit mistakes and act on new insights is a testament to his commitment to continuous improvement. Moreover, Soros encourages a culture of learning within his investment team. He fosters an environment where questioning assumptions and challenging conventional wisdom are not only accepted but encouraged. This culture promotes a collective learning process, where team members can learn from each other's experiences and mistakes. By creating an open and collaborative atmosphere, Soros ensures that the entire team benefits from shared insights and lessons learned. This collective approach to learning enhances the overall effectiveness and resilience of his investment strategies. For aspiring investors, Soros's emphasis on learning from mistakes offers valuable guidance. It highlights the importance of viewing setbacks not as failures but as opportunities for growth and improvement. Investors should cultivate a mindset that embraces mistakes as part of the learning process. This involves being open to feedback, willing to conduct honest self-assessments, and committed to making necessary adjustments based on new insights. By adopting this approach, investors can build a foundation for continuous improvement and long-term success in the financial markets. George Soros' journey in the world of investing offers a wealth of insights for anyone looking to understand the secrets of wealthy investors. His understanding of market psychology, willingness to embrace risk, commitment to research, adaptability, philanthropic efforts, long-term vision, and ability to learn from mistakes all contribute to his remarkable success. By adopting these principles, aspiring investors can navigate the complexities of the financial markets and work towards achieving their own investment goals.